Look, a real a recap of where we've come from. This has been 3 to 4 years now in the making. We are now making revenue. We're making profit. We've done 11 deals now, 10 mining deals, and we, as a lot of you know, as the family, I guess, that's joined us from the tag groups, the Telegram groups, and other walks of life. The High 55 deal that we've just completed with David and Elizabeth and their team has been brilliant, and that's given us the real catalyst to what we need to develop on and grow through now. We've started our own raise at the same time. We went for another week with High 55. We raised £600,000 in a week, and that's as much to the effort of some of the people that are helping out on this call as well, such as McHigo and Jarvie 55 and Paul McKillen, of course. So without your support for the last 3 years, some of you, we wouldn't be as far up the line as we are. We're joined by Drew as well, who keeps all the tech side things running and keeps me away from stuff like the internet and presentations, etc. The loyalty also shown by everybody is great, and we're trying to differentiate ourselves between perhaps some of the more general crowdfunding platforms, etc. We are very selective on the projects we look at. We do debate them. We don't just debate them within our own sort of investment committee, but we debate them in a sort of wider group as well. And some of the input we get from some of the people on the call now is always very, very useful. Some of the tips we've been receiving as we've done deals, can we switch to digital certificates from MINEXIA itself after we've done this raise? That is part of what the fundraising is for, to build out our own IT capability and take this even further forward. If we can go on to the next slide, Matt. Perfect. That's a real quick snapshot of why we're trying to do this and what I guess the infrastructure behind what Drew and Phil Clark are building behind the scenes, the sort of virtuous circles. As we improve one area, whether it's demand or supply, the whole system gets better. The bigger the family, and we grew the sort of MINEXIA family, as we like to call it, in terms of the investors. We grew that during the High 55 deal. We probably added another 40%. So as we grow, and that investor demand or supply demand then drives the deals we can do. We can do bigger deals, we can do better deals, and we're already branching out from mining into fintech, and with a view to going into green tech at all. Drew, is there anything you want to add to that rationale and that sort of market effect, as it were?
No, I think that's probably summarised it for the time being. Thanks, Rich.
Okay, I want to rattle through the presentation. A lot of you have seen this before. It's on the deck. The plan is, with this trumpet that, yeah, Drew drew that, not me. I wouldn't be capable of doing something that pretty. The plan with the raise this time round is we're looking to raise £350,000. The pressure is slightly off that total because of the revenue generating situation we're in at the moment. The recent deal was very, very helpful and got us on a route to the end of the year of probably £300,000 earned, and we're turning a profit now as well. And God forbid, Drew and I might actually be able to pay ourselves a little bit of money. But the growth here with this trumpet is really to get the IT infrastructure sort of 100% ours, us driving it. We could make the changes that you guys have been suggesting as we've gone through transactions very, very quickly. We have described it, I think, on a recent TV interview. We've got we still rely on the engine block of the engine as an external piece of kit. Everything else we've built around it. We now want that engine block as well internally. That will increase the value of MINEXIA and NR private market. It'll increase the capability, the speed, and sort of as we move forward, less and less human intervention. Drew and I were still beavering away behind the scenes last week when the volume was so high during the ends of the high 55 deal, but it still worked magically. There were very, very few slip-ups, but there were lessons learned, and we'll continue. I think we'll learn one of those, or at least one or two lessons every single deal we do. So as you can see by the trumpet there, we're where the Union Jack is. Two of the areas we're investigating is actually having our full license, full broking license, both in Australia and Canada. That just takes time. That's something I'm working on behind the scenes. All our partners above there, including, I mean, for example, Afex is a prime example where it just makes the transaction much more seamless for you guys when you put the money in. It goes into the Afex account and straight back to the issuer, whatever denomination. So if you're investing in sterling here in the UK into a Canadian deal, it's done through Afex without the excess charges or the high charges that potentially a high street bank would charge you. I think on one of our very first deals, I think Paul took part in a Canadian deal, and we found that the intervention or the currency side of things there was ineffective. So we wanted to sort that out, and that was something we sorted out very, very quickly. We also get commission from Afex as well. So a lot of our mining companies especially are using them for their FX strategy and their FX hedging, and we get a part of that commission. So that's a helpful revenue stream for us. The main drivers for the revenue, the raise rather, are to expand into those sort of grey dots you can see. So within the next 12 to 24 months, we are already investigating a secondary trading platform partnership with JP Jenkins. That's at a term sheet stage, and I'm discussing that with Malcolm at the moment to see how we benefit, how they benefit from our primary raises and we benefit from their secondary capability. The bond solutions, we've already done one with Verigold. That was a €100 million bond. We're investigating other early monetization bonds. We have our own fund structure in Luxembourg. We have interest from European groups that want to put money into that fund because they like the look of what we've done with our platform itself on the fundraising side. So all these things are happening behind the scenes. You guys, I guess, see the raising, but you probably perhaps weren't as aware of what else MINEXIA is up to and the drive, and as Drew would explain, the trumpet of where we're trying to get to. Drew, do you want to take over now a little bit more on the technical side, the infrastructure, etc.?
I'll try to, and this is admittedly from myself as an exploration geologist by training and at heart, and I've somehow managed to land myself in the pot of dealing and handling a lot of the IT side of things. Now, it's worth highlighting that we have a highly qualified CTO, Phil Clark, who actually does all the nitty-gritty, and I work very closely with him. But as one might imagine, behind the scenes, you see the shiny front end of the platform and the serene duck floating across the surface of the nice flat lake, and yet below the water things are paddling away like fury. And in effect, our app is a bit of a system of systems, and some of those work incredibly well. Some of them are not working as well as we could do, given the lessons that we continue to learn. And those are some of the areas we'll be seeking to improve and enhance in the coming months. And quite frankly, that's no different to any other platform that you might have seen emerge over the last 8 or so years. The Ubers of the world, all of the rest of these have gone through these sort of development cycles. One of the greatest challenges we have right now is actually just building, or it's what's technically called the technology adoption lifecycle. And in effect, we are at a stage now where we have the innovators and the early adopters, and then the classic model. There's a chasm, there's a gap which needs to be crossed before you go mainstream. And you have the early majority, the late majority, and then the what we define as the laggards. So really, as part of the technological build out, and then the subsequent enhancement of the platform, The next stage is to increase the user base as well, and to jump that chasm, to bridge that chasm. So Rich has already highlighted on this slide the sort of value add effects at the end, that mass and effect. In effect, that is revenue. We're generating a massive revenue, and the effects, and some of those effects are complementary across media, bonds, secondary market, and the like. So it has a compounding effect to add further value. Yeah, that's probably all I really need to say about that just now, other than that sort of conceptual timeline at the bottom, which, as one might have expected over the last 9 months since the onset of the main COVID period, has, for everybody, quite frankly, been somewhat upset. So we're probably back, as Rich said earlier on, just below where that Union Jack is now, and then looking at that expansion and that growth phase towards the ultimate sort of mass effect at the end. Rich, anything further on that you'd like to add?
No, we've got a couple of the questions that have already come in. I don't know whether they're coming in privately or to the entire group, so I'll just answer one of them now. There, I think I did allude to it, but I think that trumpet shows how we are trying to differentiate ourselves from Crowdcube and Primary Bid. That's the kind of a direct question that's come through. And I think you have to realize that somebody like Crowdcube is actually accessing what's called a restricted retail market. As a regulated entity, that isn't something that we are allowed to do by the FCA. I mean, every single one of you have signed up as a sophisticated or a high net worth investor. Now,
lol,
that is something we need to continue looking into. We need to keep the regulator on side and the compliance side of things moving. So that is the main difference there with Crowdcube. Primary Bid, again, as I said, was probably
hey Dad,
oh, what the fuck?
how are you going?
Matt, can we get rid of whoever that is?
IDK.
So Primary Bid is a much more scattergun approach. They started off by doing just weekend fills, i.e. they pick up a deal at 5 o'clock on a Friday and they push it out, keep it till Monday morning, and then put it back into the market. Again, we are differentiating ourselves from that, and we're trying to have a full suite of products come, you know, after this raise and come the end of that sort of trumpet of growth. We got any more? If you've got questions coming through, just pop them through on the chat thing there. Okay, someone else that's come up is, what's the broker reaction to this? Yeah, that's an interesting one. On one deal that we were doing, there was an attempt to try and block our involvement. And as it turned out, the rationale behind that block was that the broker in question actually charges the investor on the way in at 5%, and then will charge the issuer on the total amount raised through said broker. So they're getting 2 bites of the cherry. That's quite an old model, and I can understand why there was a concern that potentially their clients could go missing if they realized that they could invest in exactly the same deal but without having to pay the commission on the way in as the investor. As you all know, the sign up to the platform is free. The process is getting smoother and smoother thanks to Drew and Phil, and there isn't a charge per deal or whatever as you would have perhaps on II, or certainly I use Barclays, and they charge me per deal. Hopefully we're changing that to the point where it's obviously free all the way in for you guys. We only make our commission off what we charge the issuer. What else we got here? Apart from Russian attack, I don't know what that was. What are your plans to drive new businesses to use the platform for raises, as the quality of raises will be a huge attraction for new investors? Yeah, that's a fair point. I think the whole concept there is of the kitchen scales. I think I've said that from the very beginning. You need a certain amount of investors to be able to do bigger and bigger deals and to do deals more often. You can't let one side of the scales completely outweigh the other. We have demonstrated, and a lot of that is from the loyalty from David and Elizabeth and their team at High 55, that they backed us, they believed in us as a relatively new kid on the block in terms of the crowdfunding side of things, and they stuck by us. And that sort of deal gives us a huge impetus and a huge catalyst to be able to grow and get bigger and better very, very quickly. So yeah, keep those kitchen scales balanced. There's one from GMF here, right? Do you intend to keep the focus on mining or broaden your areas of expertise? Can see it requiring fresh employees on the diligence side of appraising projects. Well, that's, yeah, very good point. As you can see, my fintech knowledge is right up there. Drew and I have a fundamental love of the mining industry. It's in our DNA. But the plan from the previous raise and this raise is to continue the fintech and green tech verticals alongside the mining. So the NR bit of NR private market maybe should now sort of link to new raise or next raise rather than natural resources, but that's just a fluke of the lettering we used. So yes, the plan is to broaden it. We've seen how quickly a fintech deal can attract new investors, how quickly it can be absorbed, and how successful it can be. Not everybody is into exploration and mining deals, and we do have to definitely broaden our horizons. We have brought on other people in order to help us diligence those. Some of you are on the call that we check in with you as well and make sure that we all understand it correctly. Drew, do you want to add anything to that on the fintech and the green tech side?
Yeah, I think you've very much got to think of the platform as being the transactional space between a pool of investment and a pool of issuers, and that to a certain extent you can, as long as the DD's in place, you can apply any particular deal in any particular vertical, and that's certainly what Rich has alluded to. Looking at the fintech side of things, we've already started that through our relationship with High 55. Green tech, there are a range of other areas, other verticals that we have an eye on. But you're right to highlight the fact that that requires additional expertise. Now, I would draw your attention to the advisors that we already have on the team. We've got a non-executive director, Nick Pye, who's involved in the petrochemical industry. We've got a number of others who have a wide background. In some cases, yes, there's quite a spin or a reasonable part of their DNA is still mining, but they have a much broader knowledge and indeed their own network into some of these other areas. And indeed, mining, fintech, green tech, some of those, there is often a crossover, particularly the green tech side of things, where ultimately all of that is going to ultimately derive from metals that are going to have to be mined anyway. So there's often some degree of commonality. But in terms of building out our associates, or shall we say our advisors baseline, that's something that certainly Rich and I are discussing on a regular basis. And as he's alluded to, there's a number of people, some of whom are on the call today, who are also very useful for us to tap up for information, to get another perspective, to get a different view on what's going on, such as that we can make sure that the deals that ultimately go on the platform have met that, what we deem to be a high bar.
Yeah, thanks, Drew. Just finishing off on the broker side, someone else has said, so as a disruptive business, you expect the brokers fight back. How do you feel you have continue to retain an edge and a competitive edge against the traditional brokers? I think the cost of what we do is much more efficient. As you guys have seen, the signing up process is very efficient. It can all be done on the phone now. Later on down the track, it'll be an app as well. That's something that Phil and Drew behind the scenes are discussing. So it's just making it faster and more efficient for everybody and cheaper. At the end of the day, you know, the standard rates in Canada can be 7 or 8% plus extras on top of that. If we continue to be a cheaper, more efficient solution to people, the clients will come to us. But as I keep saying, you've got to have that balance between the client capacity and the number of investors in order to keep it moving forward. There's one from John Parfit, Drew, that you probably need to answer. Can you say anything about how far down the track identifying the IT requirements you need and how we're going to resource that, and the sort of budgeting from this raise, and how much is that really going to Phil as our Chief Technological Officer, and what he wants to build out and how long it's going to take and the cost?
Yeah, that's one of those sort of how long is a piece of string, really. I think straight off the bat you have to recognise that the technology stack that's currently sat behind the platform is pretty extensive. So our service provider, Catapult, who are Canadian-based, but you know have been working across a number of sort of verticals for a number of years now. There's numerous different APIs and bits that ultimately plug in to give you the effect that you see on the screen today. And some of that works perfectly well, and some of it, frankly, could work a lot better. And that's why we're sort of very receptive to the feedback, some of the discussions that we've had this week, indeed, about this is not quite as slick as it could be. You know, can we think about this? The comments about an app. Yes, absolutely. This is right now a web-based platform that is mobile compatible, but it could be better, and therefore an app solution that's dedicated to mobile technology would be the sort of Rolls-Royce solution. And therein is part of the rub. Do we build for the Rolls-Royce solution on phase 2, the next iteration, if you will? Do we shoot for a 80% solution for 50% of the price? Because inevitably it's that final 10, 15, 20% that costs the most in terms of time and effort and money. So to be fair, and I'm not trying to dodge the question, it's probably a better question that would be better answered by our CTO, but certainly what we aspire to do is use what works, build or enhance what doesn't work so well. And indeed, you also have to bear in mind the pace with which new technology is emerging. So we're seeing ID systems, KYC systems that are more mobile friendly, to the point of being able to take a photograph of yourself, of documents, and scan that straight in to the system. So we are looking at those systems, and one of the challenges will just actually keeping everything up to pace. And in terms of financing for that, well, a significant proportion of what we're seeking to raise will be going directly to that tech build-out. I hope that answers that question.
Yeah, and I think there's probably a more pointed question there that hopefully Drew's answered there. You guys find deals and you have a platform. I think in one of your interviews, I assume you're referring to me, you likened yourself to Uber. The platform is lacking. When will you build out and deliver a proper UX? Okay, that's to the point. That is what we are continuing to do. As you said, we are now creating decent revenue. We're turning a profit. That is being plowed back into the system, and this raise will continue to develop that UX, that user experience, and all the feedback we've had during the High 55 raise and previous raises, we've taken on board. Simple little things like acknowledging receipt of subscription agreement and the company acknowledging receipt of the money. We don't have access to the company that's raising the money to their bank account, but we are working with their group treasurers, their CFOs or whatever. We need to have some sort of button that they can press that automatically alerts you that, yes, thank you very much, your funds have hit. I know that can be frustrating if you think you sent, a few £1,000s to a destination, you're not quite sure if it's got there yet. So that's one lesson we learned from this process. So thanks for that pointed question. We've got a few minutes left. I think one of the main from an investor point of view, we want you guys not only to get involved in our deals, but also to invest in us, invest in the mothership, as it were. That opportunity is going to be open till mid-late January. As I say, we're only looking to raise £350,000. The revenue has helped us with that. But I think the exit, you know, it is not a liquid stock at the moment. The secondary trading with our JV with JP Jenkins, that's going to help. So people will be able to get out of private shares that they buy on the platform, and indeed our own MINEXIA stock. The raise is at 15p this time, but someone's asked, what is the long-term exit strategy? Do we plan to IPO in 3 years' time or whatever, or is there a potential private sale? We have actually been approached recently to buy a vertical slice of the platform. I'm in consultation with those guys and discussions. We'll see where that goes. I don't think it's valuing us at the level we need to be valued at, but they're obviously taking the view at an early stage that they can get in at a lower price than we would expect. Now, those discussions are proof that there is interest out there. This is the first approach we've had. I'm sure we'll have others. As we grow and get bigger, there'll be more and more of those inquiries. The alternative, as you've suggested there, is yes, an IPO is there as a potential, whether that's on AIM, on the full list board on the FTSE. I'm not sure whether it's on the Toronto Exchange. Probably, I think this sort of model would be suited to AIM. But again, that's something that the board is continually discussing, and what our plans are for all that. What else have we got? Last one then. Probably got time for one more. Let's presume I want to raise capital of £1 million for my mining company from UK investors. I've heard of crowdfund, primary bid. I assume you mean Crowdcube. How do I find it, and what attraction do you offer compared to your competitors? I guess the difference there is we're vetting the deals. You've got certainly on the mining side, you've got a team of experienced geologists, mining engineers, and that we vet the deals. Likewise, we're picking. Oh well, I'm back in the room. How did that happen? Right at the end. Likewise with the fintech deals as well. David Brown has put a point out there to thank everyone at High, or from High, to all the investors. I'm going to keep bugging David. He knows what he's talking about. He's built an amazing company, and that will grow and grow and grow. If he thinks I'm going to ignore him and not ask him questions about how he's grown his business and the tips, then he's got another thing coming. So no, we've enjoyed that experience with High as well, and the extra members of the family, if you like, that we've brought on board during the process, and that goes out to all you investors. Hopefully you're going to become investors of us. And there are, as I said at the beginning, a few names out there such as Paul and McKigo, etc., that have really helped us in continually to bang our drum for us on our behalf. Do I have any more questions? Where would you like to see NR valued fairly in, let's say, 2 years' time and 5 years' time if the current SP is 15p? Oh, I don't know. Pick a number, Drew. Quid? More? Guys, I don't know. We just need to keep focused on the revenue and deals. We cannot let the ball or drop the ball in terms of compliance and regulatory focus. That is paramount. The susceptibility of any platform to money laundering and stuff like that is high. We have to make, continually doing pen tests to make sure the security is at a decent level. But it's the more people like you we bring on board, the bigger, better deals we can do, and then you can start doing multiples of revenue and EBITDA, etc. At the moment, we value ourselves pre-money at 1.3 million. That is the money that's been sunk into the project to date. I'm not doing any multiples yet or anything like that. If we do start doing secondary trading with someone like JP Jenkins, I guess that in itself will generate a grey market valuation. But it isn't until someone makes a bid for a portion of the platform, or we go to do a listing, that we'll know where we're at. But I would have no intention of listing this below £1.50. I don't think that would be fair on anybody. We need to grow this for you guys as investors as well. We've seen how the valuation of David's company can grow so quickly. We'll probably go a couple of less zeros than high 55, but we want to grow on the same trajectory. I don't see any more questions. Drew, do you want to wrap anything else up further? We've got just under 3 minutes.
I think I'd just like to reiterate our thanks for everybody joining us today, and just to what we're doing now exemplifies again another reason where I think we can differentiate ourselves from the, shall we say, the more traditional forms of raising finance. Feedback is a fantastic thing. We would like to have a active, dynamic shareholder base who are coming to us with ideas, be those ideas for companies they've spotted, be those technical ideas for the platform. Can you make it do this? Can you make it do that? Well, the simple answer might be yes, or it might be no. Or it might be, well, that's a great idea, we'll park that. That might come in phase 3. But the key thing is that there's an engagement process. And Rich and I, we're always open to catching up with folk. Hopefully in 2021, we will see a little bit more flexibility on getting together, and we would certainly look to have an opportunity to see everybody in person and to really work and maintain and nurture that relationship. That's vital to us, and I think again differentiates ourselves from, we say, the traditional brokers and other forms. So thanks again from me. I don't think there's anything more I can add at this point. Thanks, Rich.
Drew, well, thanks again. Thanks for everyone's support and help on the recent raise. You know where our raise is now. It's on the platform. It's the only live raise and will be the only live raise during the Christmas period, and it will close, as I say, end of January. We're looking to raise £350,000. We've already got commitments coming through. You guys know how to sign up. You've done it before, and we'd like to welcome you to the investor base of our company as well as our family of investors. That raise is going at 15p, and that'll be a big step for us to get all that IT infrastructure within our own remit. Well, thanks for your time. I know it's a Sunday lunchtime, and we shall be available for questions if anyone wants to get hold of us directly. And on that note, I'm just going to end the call. And sorry I had to drop out for that, but my internet was all over the joint.
Thanks, everybody.